Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals. Gold prices sharply lower, especially if you look week over week. Recall not too long ago we saw gold prices get up as high as $13.65 with a modest pullback, and now we're starting to see stage two of that pullback, taking us not only away from the upside bullish momentum, but taking us back into neutral territory. 1340 was a level we wanted to watch. Kind of if we can get a period of sustainable trade there, it would keep us at neutral, but we're now about 10 bucks below that. We'll have to wait and see. Next support comes in around 1325. And if you go back over 5 of the last 6 weeks, we've settled week over week higher. Obviously, that's not going to happen this week. It'll be interesting to see how the market reacts to what we're seeing. A lot of things happening in the market. Equities seeing major sell-offs. We saw major sell-off in Treasury. Treasury yields hitting their highest in almost 4 years in the 10-year bucket, and that is probably part of the reason why you're seeing some of the luster move away from gold, as it is a non-interest-bearing instrument. So right now we're seeing higher interest rates, we're seeing lower stocks, we're seeing higher market volatility, which would bode itself to believe that you're going to have the sort of the insurance policy gold being bought, but it is being sold. And I think that right now we're just seeing a real position rinse. And the dollar didn't really help or hurt gold today. Yeah, it was higher, but I don't necessarily think it was stronger. I think that the dollar right now remains technically on lows. If you look at the DXY, it remains in those dreary lows. And really, any uptick is met with modest or resistance and short-lived, and then we go right back down to the lows. So I think the dollar right now, while it may be looking stronger down the road if the Fed gets more rate hikes and the dots and the expectations get into line with one another, that could be a big help. So I think right now the dollar is more of a hope trade to go higher, but again, it was higher and not stronger, which is I think why we saw some of the selling in gold. But obviously, if we go to the last point, positioning, I think a lot of these spec longs are running for the doors. Once you got south of 1340 and probably right just above it, it was really became a selling, a race to see who could get out first, and that pushed us down, towards 1330. So right now, I think the positioning wise, we haven't seen the data yet. We won't get that data till next week, but I think a lot of this preemptive selling might have come on the heels of just the fact that we saw a $30 move lower after hitting the highs, and then we saw another significant leg lower. And so all those spec longs that maybe got in at this level are looking to run out if they hadn't had the opportunity to sell yet. And likewise, I don't think they're getting short yet. I think if you get down to 1325, they're going to be back in buying. And again, if we see another scale down move to maybe closer to 1300, they'll be buyers again, because there still is a lot of risk out there. And while gold has seen very wide ranges, it moves up very quickly, it moves down very quickly, but trend-wise, it has been moving up. And I still think that the high risks that we see priced into the stock market, that we see with the Federal Reserve, that we see with geopolitical risks, they all add to one thing, and that is insurance necessary purposes buying, and we're seeing that in gold. We just aren't seeing it today. So gold prices lower heading into the weekend. Probably going to see a little follow through early next week, but don't forget we have a new Fed chair taking a hold of the gavel on Monday. Jerome Powell will sit at the head, so things might be a bit dicey, and gold buyers will probably be out on another dip. This is Todd Colvin coming to you from the floor of the CME Group.